Hey, what's going on, everyone? Welcome to another episode of the Great Black Speakers Podcast, where we connect through conversation. I am your host, Lawrence Watkins. I am the founder and CEO of Great Black Speakers Bureau. I'm also the president and chief operating officer of the Black Business School. So today we're bringing you a very special guest, Ms. Natasha Varela. Natasha is a corporate tax accountant for the last 12 years, and she works with large businesses and corporate taxpayers. She works with businesses that have revenues greater than $10 million or revenues and assets greater than $10 million. And today we're talking about tax. It's tax time right now. So we're going to talk about how large corporations pay less tax than you do. And she's the expert on this subject, and we're very happy to have her. So Natasha, how are you doing today?
I'm doing well. Thank you for having me.
Yeah. So let's jump right into it. So can you tell the audience a little bit more about yourself and then how you've gotten to this point in your career?
Absolutely. So I am a graduate of SUNY Albany in New York. Shout out to the Great Danes. I got my Bachelor of Science in Economics way back when. I graduated with my Master's in Accounting from the College of St. Rose. And from then on, I started my career as an auditor. When I started, I was doing mostly Sarbanes-Oxley compliance, which is mainly internal controls. I worked overseas. If you don't remember anything about me, remember I'm probably the only person you've ever met that's worked in Siberia and, many different countries in the oil industry. So I ended up jumping from, company to company into media and entertainment. I worked for Time Warner in internal audit and then for a law firm, and then I got into the Internal Revenue Service in 2008. And I started working with in the large business and international division, those taxpayers that report 10 million or more in assets as an examiner. And so here I am.
All right, got you.
Almost 12 years later.
Yeah, did you always want to be an accountant when you were growing up? What made you choose that field as a profession?
I don't think I chose the field. I think the field chose me. Numbers was easy for me. I took accounting in high school, and it just, back when you had those long papers, those long yellow papers when you put everything on the ledger. And from then on, it just stuck with me. So I knew from my undergrad that I was going to get my master's in accounting.
Okay. Now, when people think about accountants, they think about individuals who have, I guess they're called bean counters a lot of times and that type of thing. But you worked in audit for many years, and you've had a lot of different types of experiences when it comes to, accounting. So can you talk about what it's really like actually being an accountant, and especially being an accountant for these large businesses that are producing a lot of revenue?
So from my start, in accounting, a lot of us start in auditing, and a lot of us think, we aren't bean counters. We just go for the numbers, which is not true. I actually started process auditing. So auditing actual processes from start to finish and, areas of improvement for the process, anything from, separation of duties to make sure that there's no, commingling of duties where you can have, a lack of internal control, to doing financial audits. So there's information technology audits. So there's definitely many different fields to accounting. So it's not just, accounting the numbers. And there's also, you have your input side, people who are, in accounts payable, accounts receivable, doing the input for companies. And then there's the people that are on my end who are the reviewers, on the back end. After everything's happened, I work my way back into the numbers to make sure they're legitimate or they represent fairly.
Well, let's talk about that a little bit more then in terms of audit and working with these large corporations, specifically as it relates to business in general. What has audit taught you about business?
Audit has taught me that businesses are very creative. They stay one step ahead of everybody. And this is what they do. Their goal, like anybody, even individual taxpayers, is to minimize their tax liability. And, on the corporate tax return, it is much easier because it is set up differently. For those of you who don't know, the corporate tax return is the Form 1120, and the individual tax return is the Form 1040. And how it works is, we're W-2 employees, 1099, however have you. You plug in your wages, You pay your tax, then you get to pay your bills, right? Your rent, your lights, your gas. Whereas on the corporate tax return, they get to pay their bills first, and then they pay tax with what's left over. And so when you get to do that, you get to, I don't want to say manipulate, but you get to utilize what's available to you before you pay your tax in many different ways. Where the individual taxpayer doesn't have a lot of leeway.
Well, I mean, and that's interesting because, Warren Buffett talks about that quite a bit in regards to how he pays less taxes than his secretary, for example, right? And how the system is rigged in favor of investors, right? Or like the rules are rigged, in favor of investors and not people who are labor, right? So
not your W-2 labor,
Yeah. So can you talk about that a little bit more in terms of like how those rules favor the investors, and then what people can do about becoming investors and taking advantage of maybe some of those things.
So like I said, the standard return for a business is set up so that you get to take your expenses, right? You get to pay your employees, you get to pay your rent. If it's a brick and mortar, you get to pay your admin expenses. You get to pay everything before you pay the tax man, right? You pay the tax man what's left over, whereas a W-2 employee has to pay the tax man first. So, what I try to promote, and myself too, is to utilize investment activities like real estate. Investing in real estate instead of, an owner-occupied home. You might want to invest in multifamily real estate. People don't know there's the Schedule A, which is our standard deductions, which, in any tax law, especially with the Tax Cuts and Jobs Act, it's always going to favor investors and businesses, right? I mean, you're not going to get much out of your standard deductions, especially when they're raised so high that even if you do rent your single family home, or you take your mortgage interest on your own occupied home, it really may not affect your bottom line that much. Whereas if you do invest in, say, a multifamily home, you get to take phantom expenses, which are like depreciation, right? And 9 out of 10 times that creates this phantom loss, which means if you have a loss in your rental income, you don't pay taxes on your passive income, which is your rental income. So that's how you can avoid, paying taxes on any passive activities.
Got you. And, I'm thinking about just, tax law and just what has been happening since, President Trump has been in office. And, one thing that was really popular or just, in the media a lot a couple of years ago, I guess, was the Trump tax plan, right?
Is that the Tax Cuts and Jobs Act, TCJA?
Yeah. Thank you.
Yeah.
Thank you.
TCJA.
And another thing that came out of that was opportunity zones, right? In regards to, are you familiar with opportunity zones?
I am not familiar with opportunity zones.
Okay, basically they are these, I don't want to call it tax haven, but basically deferred taxes if you invest in certain areas in the United States.
Okay.
If you invest in like certain zones that were, I guess, underdeveloped, right? You get deferred taxes for like 7 years. If you invest for up to 10 years, you don't pay any taxes for any profits that were generated in that particular zone. If you take your money out, 10 years later, that type of thing. And, the purpose is to, facilitate growth in those particular areas. But what's happening is a lot of, rich people with capital, since, it affects, what is it called? Investment income, so you take your investment income and invest in those particular areas. Most regular people don't really have that type of investment income, right? So it's like, they thought it was going to level the playing field, but what it's really doing is accelerating like gentrification and other things like that.
For people that have money that's readily accessible.
Yeah, for people who have money that's readily accessible, who have made money via investment income, which has a lower tax rate, they are investing in these certain areas. Right. But I think the bigger issue, or I guess my bigger question is, tax law and how it affects where people invest and how they invest, right? So this tax cut of President Trump is like affecting these areas because most of the incentives for opportunity zones are tax-based instead of like some type of out-of-pocket revenue based. So in general, I guess from what you see, I know we've talked about it a little bit in terms of how people or how corporations take expenses first, and then,
Correct.
they pay taxes versus individuals who pay your taxes first.
Absolutely.
What do you see, I guess, in general, in addition to what you've already talked about when it comes to taxes, right? In terms of like tax law and how people decide to invest their money?
Well, I don't think people really think about how to invest their money, right? The average W-2 employee, we all grapple for, our refunds at the end of the year or April 15th. And we don't think about how to strategize during the year, right? How to take that money, if you do have it, and prepare and, invest. There are many ways to invest. You can do stocks, you can do real estate. There are ways that you don't have to go, out of pocket. Say, like you say, for real estate, you can invest in, say, a real estate trust, right? Where you don't have to come out of pocket the same amount of money for an actual property and take on such a risk. So I think people don't really do the research on ways they can defer, any tax liability. There's a very big difference between tax avoidance, which is legal, and tax evasion, which is, illegal, right? And corporations take advantage of tax avoidance of all the laws. And they also have, a further reach. A lot of the corporations, they income shift, right? So they have parent companies or subsidiaries that are out of the United States. And, they set it up to where we call this transfer pricing, right? And I'm not a transfer pricing specialist, but I do know about it. And I have, dabbled in it in my career a little bit, where you have a company that you set up overseas in a low tax haven and you do business with them, and, you purchase your goods from them, and therefore, you control the price, right? Or you control the cost and you can make it, not make it, but you kind of have a little bit more control over what your taxable income is, at the bottom line. Whereas individuals, we don't have that access, we don't have ways of shifting our income to, a lower tax jurisdiction legally. We just don't have the reach.
Right. And, I think that's why, was it 2 years ago when the Panama Papers came out and, showing, are you familiar with the Panama Papers? And,
I am not.
Okay, yeah.
So something.
Yeah. But when the Panama Papers came out, in terms of looking at the tax haven that Panama is, mm-hmm. right, and all of these rich people from all over the world who were invested there. I mean, I know the royal family of Britain was, a lot of other wealthy people. I can't think of who at this particular moment. I'm sure if I did a quick Google search, it will pop up. But yeah, like these tax havens and like all these different things. And another thing that comes to my mind is, corporations keeping their money overseas, right? So
absolutely. And there's a lot going on with, the corporations shifting their money overseas and, trying to repatriate it, bring it back into the United States without being taxed. So, it's always a game. There's so many ways that there's so many avenues they can, because they have the reach to circumvent a lot of what we can't as the individual taxpayer.
Right. Yeah. And, I'm thinking about, let's say, these other large corporations that are in the news of not paying any taxes, right? Any federal taxes, like Amazon comes to my mind. I think the New York Times had a very low tax rate. They were talking about some other company that had a low tax rate. It was interesting. A company, or the New York Times wrote an article about, I cannot remember what this large corporation was, about not paying its fair share in taxes. And then that other company, the CEO came back and said, well, I'm looking at the New York Times statement, financial statements from last year, and they paid less taxes than anybody or something like that. I can't remember. It was something like that. But all these, even like the companies and these corporations that are trying to call out other corporations for not paying any taxes, they're still not paying any taxes on a federal tax level. But I think that's a misnomer. So can you tell us maybe a little bit more how that works when you hear that Amazon didn't pay any money in taxes this year? Like, what are we really saying? Like, where did that money go? And how do they do that in a sense?
How do they avoid paying what we think is their fair share.
Yeah. Like,
Well,
what does that
again,
look like?
that's easy. That's how the return is set up. You can pay your officers and pay your employees. You can take all of these expenses, you know, from rent to any loans. Any loans you have interest on, they can deduct some. I mean, Publication 535 will tell you they have a plethora of expenses that they can deduct. And not only that, if it's not Amazon specifically, I don't know. I haven't looked at their return, but like I said, corporations have access to income shift, to lower tax jurisdictions, so the income doesn't hit their return. So it's really easy, just on the face of the return.
Got you. When we come back, no, I mean, that's a very interesting subject. And it's really the staple of this year's political debate. If you think about it, this whole, populist movement, populist nationalists like Donald Trump.
I've been doing this 12 years and it's the same, Again, they get to take their expenses and they have access and reach to income shift, whereas we don't. So no, of course, they're not going to have to pay, what most people think are their fair share, right? I mean, there's no way I can shift my income to Sweden or anything like that. That's not what's accessible to the average taxpayer, the 1040 or what I call taxpayer.
Right. For the people just tuning in, I am here with Natasha Varela. Natasha is a corporate tax accountant for the last 12 years, and she works primarily with large businesses and corporate taxpayers that have businesses with revenues and assets greater than $10 million. And today we're talking all about taxes and how large corporations pay less taxes than you do. And Natasha talked about that in the first segment. And this upcoming segment, I really want to get into the individuals and what we can do to start maximizing our tax strategies and tax optimization, for the future. But before I do, please make sure you press the thumbs up button, show Natasha some love and show the Black Financial Channel some love so that YouTube's algorithms can show us some love as well. And more people will be able to see this interview. So actually, on the count of 3, if everyone can press the thumbs up button, I would really appreciate it. 1, 2, 3, press the thumbs up button. We really appreciate you. We have about 40 people watching right now. So I'm happy to see everyone who is out there in YouTube land. So let's get personal.
Sure.
And not like you and I personal, but personal taxes and just things that people can do to really optimize the game, right? In terms of taking some of the tricks.
Here's the thing. If you're dead set on your W-2, you're never going to get anywhere, right? It's just not going to happen. Grappling for, dependents or, credits that really aren't going to surpass your itemized deduction isn't going to work. So I, try to tell people, your tax refund isn't going to change from year to year. Messing with your withholding during a year, you have to think about things from a transactional perspective. And I can give my own example. I purchased a condo many moons ago. And, I started to deduct the mortgage interest rate, and it was a good tax shelter. But when I moved it into a rental property, the bottom line was significantly different, right? Because now you get to take all these expenses from your HOA fees, depreciation, which is a good expense because you don't pay depreciation, right? It's a phantom expense. You just get to take it, which, is awesome. You get to take any repairs, and I generate a loss every year, right? Not because it's a true cash flow loss, but it's a tax loss. And I think people don't understand there's your accounting and then there's your tax accounting. So your tax accounting is a bit different. So I generate a loss, so I don't pay taxes on my rental income. And I know a lot of people are into, the American dream, the single family home. But when you start to think about investments, I think one of the easiest and most accessible ways we can is to, access programs that give you help with down payment and purchase, multifamilies and income producing properties. If you're thinking of starting a business, I would definitely, that's a perfect way because again, you get to take all your expenses. Even if you're a sole proprietor, you get to take all your expenses and reduce your taxable income, and it's also, a lifestyle change. I didn't really think I wanted to move out of my wonderfully beautiful condo, but I did, and I rented a cheaper apartment. So, my bottom line started to change when my mindset started to change and start to think about things transactionally, tax-wise, from a tax strategy and my investments and, maxing out my 401k so that I have less taxable income. So things like that, people can start to think of. I urge anybody, if you're thinking of starting a business, when you make your first dollar, you can start deducting. You can go to publication 334 for small businesses and look at what you can capitalize and what you can deduct in the first year. I mean, you'd be amazed at the difference. So yes, I do say if you're just, if you're not just, but if you're a W-2 employee, you're going to have to start thinking along the lines of an investor and a business person.
Yeah, no, that's interesting. And I guess my follow-up question to that is, you talked about how you save so much in taxes just by switching the use of an asset that you already had, right?
Absolutely.
So switching the use of your condo to it now being rented out and becoming a rental unit significantly reduce your tax bill.
Yes.
So
my condo now pays my rent.
Right. So now your condo pays your rent, and you didn't do anything really that different other than just get a new tenant, right?
I just got a tenant, and
yeah. Mm-hmm.
And the tax laws are there, it's right there. And I use TurboTax. I'm a tax accountant. I don't have to really do anything special. It's the depreciation, and I did some, and I'm growing my real estate portfolio, and I did some searching, and most investment properties, which scares people, create this loss. And to me, a loss is not a bad word on a tax return, right? All corporate taxpayers know loss is a good thing because loss means less taxable income, which means less taxes. But that doesn't always translate to a loss as profit, right? There's your accounting, right? And then there's your tax. So most people are afraid of the word loss, but it's actually a good thing as far as, investing in real estate. That's what you want. You want positive cash flow and a tax loss for your passive income.
Right. No, that's interesting, and I think that's definitely true. And most people, even most entrepreneurs and business people, don't keep two sets of books, right? So the books that you keep as your day-to-day operating tax or operating accounting is usually the same as what you use for, I guess, taxes as well.
That's all you need. I mean, honestly, a tax software is going to calculate a lot of things for you. They have software for small, and people think that they have to go to accountants, and shout out to the accountants out there that do the complex, calculations that, your average over-the-counter software can't do. But most of the time you can do it. It's right there. I mean, I use TurboTax and it calculates my depreciation. It asks you simple, when did you purchase? What's the cost? You get a statement. If you have HOA fees, you get your 1098 from your bank for your mortgage interest, and you get your real estate taxes escrowed in if you have a mortgage. So you have all of that. So it's really simple. It's nothing that you really have to keep separate set of books for.
Yeah, or even having like your home office deducted, right? So you can deduct, I guess, the percentage of the square footage of your house. So if your house is 1,000 square feet,
yep.
Yeah, and your office is
100.
10%.
10%, absolutely.
Yeah. So it's just a matter of use. So a lot of these tax things, come down to how something is being
keeping
used.
Excellent records. Keep those records. It is important to keep all records. And a lot of people, like you say, they're day to day. They don't really, they might put everything on separate credit cards. Keep a separate credit card for your expenses. Keep everything separate. So it's that much easier.
When you learned about the game, switching the subject a little bit, you learned about the game, the tax game.
Mm-hmm.
How did you feel? What was going through your mind when it hit you as a revelation, or even if it did hit you as a revelation, but as soon as you were going through that revelation process, I guess, what were your feelings as you started to learn more and more about this?
So I was in training way back when I started. And I forget the guy's name, but he came in and he said, you're never going to get rich here. And I knew what he meant, meaning you get your W-2, like most of us, you plug it in, take it to H&R Block, take it to wherever, and we get our tax refund. And like you said, we're grappling for these, these credits or these deductions that really, in the end, aren't going to help build wealth through that kind of tax strategy. So I started to, kind of document my journey, like they said, moving out of my condo. And I'm like, wow, look at what I'm getting back, as a tax shelter. And so that began my journey to purchase another property. And I lived in the property for, a year. And I ended up selling the property because, it didn't make sense. The numbers didn't make sense, but I did rent that out. And, I made my money off of it. And again, the numbers just started to work out. And I started to see like, okay, this can't be just a paycheck thing. It has to be an active pursuit for strategy, for investments, and to start thinking about ways to defer or to minimize, avoid, not evade, avoid, taxes using the tax law. So from now on, when I think about, most people are thinking about their refunds this year. I'm already thinking about what I can do this year so that next year my tax return, you know what I mean? You have to be very preventative. In an internal audit world, we have preventative measures and we have detective measures. And it always works when you're preventative, right? You start from the beginning. What are you doing this year to minimize your tax liability next year? What investments are you making? So often we hold on to a dollar and that it just doesn't work, right? Your money's not making money in the bank. We hear this all the time. You have to actively put your dollar to work. And that means letting go of it. And I let go of my dollar into real estate and future business. So
Got you.
Yes, you have to let go of your dollar. You do.
When we first met, there was something that you told me that really stood out and, has had me thinking since, that conversation.
Don't get me in trouble, Lawrence.
Well, no. Well, let me say somebody, right? Somebody said that, your tax liability is your number one liability that you pay.
It is your largest expense. It is not. Most people would think, your housing it's actually a tax liability. And it's actually what we most ignore until it's time to file, right? It's like, I hope I don't owe anybody. I hope I get a refund. I mean, you should be thinking about your expense year long because that is your largest expense. It is your tax liability.
Right.
So
I think that
think about it during the year. What are you doing to minimize it for the following? Always these corporations, they're a step ahead. They're thinking about the next 2 to 3 years. They take losses, and these losses can be carried out up to 20 years, and against future income, right? Your net operating loss deduction. We don't have that, right? If I have a loss because I had to pay my rent and my check doesn't cover it, I can't take that loss next year as an individual because that's just not the way it's set up tax-wise.
And that's not the way we really just think about it because we never had the opportunity, right? Because that really stood out to me because you hear people talk about, well, you need to cut your housing expense. You need to move into a smaller or a smaller house. Maybe you need to downsize, or maybe you need to cut down on your food budget. Like all these different things in regards to personal expenses to
These
cut
are all
down
after
on.
the fact, right? All after the fact, yeah.
Yeah, but then there's just like this big 40% or 30%, whatever it is, 30 to 40%. That's just
24,
there.
30, yeah, that's there. Yeah.
Yeah, that's there, and we think we can't do anything about it, right?
And
as
you
people.
can. There's a lot of programs out there for people who want to invest in real estate, first-time home buyers, down payment assistance programs. There's a lot of apps out there, Stash, Acorns, Robinhood, where you can, I have Stash, and you invest in shares fractionally. There's a lot of vehicles out there for people to actually put their dollars to work. You can increase your retirement contribution. There's a lot of things you can do.
Yeah, that's interesting too.
You can start that business, even if it's, a small step.
Well, actually, when we come back, I want you to talk about those three things. I mean, you've talked about it throughout the interviews, but you talked about the real estate piece, the business piece, and then you just mentioned the retirement piece that we haven't talked too much about. So in our last segment, I want you to just talk about those things and also how people can get in touch with you. But before we do all of that, I'm here with Natasha Varela. Natasha is a corporate tax accountant for the last 12 years. She works with large businesses and corporate tax payers that have revenues of and assets of greater than $10 million or more. And today we're talking all about tax, how large corporations pay less taxes than you do. And Natasha has laid it out plainly in terms of how that happens. So if you like the content that we're producing today, please go ahead and press the thumbs up button, show us some love so that YouTube's algorithm can show us some love as well. Make sure that you share this video with all of your W-2 people out there, your friends, people who, want to know how to save money and keep more money, so that you can, feed your family, give back to the community, however you want to spend it, but spend it on the things that you want to, instead of paying it to Uncle Sam, like these large corporations are doing legally, might I add. And then, make sure that you subscribe to our YouTube channel as well if you want to receive more content like the content that we're doing today, as well. So Natasha, in this last segment, let's just get even more tactical, right? So okay. Let's just lay down your action plan for those three things, right? In terms of the real estate piece, the business piece, and then also the tax retirement, the retirement account piece as well, and how that plays into your taxes.
Well, me personally, I maximize my retirement contributions. And thankfully, I'm able to do that. Not everybody's able to do that, but thankfully, I'm able to do that because I took a couple of hits when I was younger. Many people out there, you have a lot of expenses. I had, $85,000 in student loans. When I got serious about my finances, I took all my savings and some of my retirement funds and paid off my student loans. And that would increase my credit, and that would fuel me the opportunity to invest in, say, real estate, and also play catch-up contributions with my 401k. And one of the things that, we went to the Freedom Event seminar that resonated with me is that your retirement return is not always greater than any other outside investment, right? So we have to start looking at things competitively, right? So my condo yields a better return than, say, my 401k. So I sought the strategy to put myself in a better position to purchase property. So, I took the money out, but I was able to pay it back later. And so I use that that retirement as a vehicle to help me move forward in investing in real estate. I also, once that was clear, I also maxed out my retirement contributions. That greatly saves me on my tax liability. We don't know where our tax is going to be by the time we're collecting, but right now it does save on your tax liability. So, that's one of the ways you can is to increase your retirement contributions, is to reduce your tax liability to increase your retirement contributions to reduce your tax liability. I play a lot with my Stash app. Stash is, fractional investing. You don't have to know a whole bunch about stocks. It's pretty intuitive. I have it come directly from my bank account in line with when I get paid. So I have money coming out, going straight to my investment app. I know Robinhood is good. I don't really play with Robinhood too much, but I know it's good. I have played with it a little bit. And I use Acorns. Acorns is your roundup, so you spare change. So that's kind of where, a way of starting investing activity. So if you do have any, if you have any inclination also to start a business, I encourage it, and it doesn't have to be $1 million business, right away. You don't have, just start brainstorming on what you can give and what you can serve, how you can serve, and how you can, monopolize off of your gifts, your talent, and, write about it, share content about it, and start thinking about yourself as a business and not an individual.
Wonderful. I think that's a good place for us to end. Yeah. So if people want to know more, get to know more about you, how can they get in touch?
You can email me at natasha.varela@gmail.com. I am on Facebook. I am the Money-Nista. And you can DM me there. MONEYNISTA.
All right. I'm pulling up the page right now, and I'm going to drop the link in here.
You can DM me there, or you can,
All right. Here's the here's the Money-Nista page, everyone. So I put Natasha's email address and also her Facebook page in the chat. So
and my Instagram, _Money-Nista.
Oh, _Moneyista. Let me find that real quick. Instagram, the _Moneyista.
Mm-hmm.
Moneyyista. That's what I write.
Moneynista.
There we go. There we go. All right, got that too. So all of that stuff is in chat for you guys, everyone. So please make sure you check out the Moneynista, Natasha Varela. Natasha, we thank you so much for being on
Thank you for having me.
Yeah, and
I got to be careful about giving advice.
I know, and I thought about that after I asked that question.
It's okay. It's okay. Soon.
That's right. So, so I would also like to thank the Black Business School. So that's our corporate sponsor. So at the Black Business School, we don't just help people. What do we do? Hey, I'm all off today, Natasha.
You educate.
Yeah, I know. I'm off today. We don't help people just climb the corporate ladder. We help them build one as well. I've said it like 10,000 times.
Yeah.
What we do is help African Americans obtain a culturally relevant yet practical education in all things wealth building at an affordable price. People come to us for three main reasons. Or things going on in their life. They either want additional freedom to do what they want to, control their own day, hang out with their family, travel the world. They want to leave a legacy behind to their families and their communities, or they want additional stability and safety going into their retirement years. So at the Black Business School, we help you with all three of those challenges and more. We focus on the three key pillars of wealth building that we talk about all the time: are entrepreneurship, real estate investing, and stock investing. So we have courses and classes on those, as well as things to get your personal finances in order as well. So please head over to theblackbusinessschool.com. That is theblackbusinessschool.com to learn more. So on behalf of Natasha Varela, my name is Lawrence Watkins. You guys take care, be blessed, and have a wonderful day. All right, bye-bye.